Hello, listeners. This is Kapil Khandelwal, KK of Quote Unquote with KK. We are broadcasting our 2020 season finale. We have invited back Mark Mobius, who started our show back in May this year. Uh, Dr. Mark Mobius has been working on our podcast for last few sessions and has been an inspiration to many of our listeners globally as well as in India. Today, our podcast has reached over 175 listeners in India and globally. Thank you, Mark, for being part of our journey.
Thank you.
Mark, this time of the year when all the sell side equity researchers and equity houses and brokerages publish their 2021 outlook, we thought it would be great to have you back to decode what's going to occur in 2021 and give your views on what's in store. Let's remember that the largest of the brokerages and research houses, including our fund, did not get 2020 right. So due to the COVID pandemic. However, Mark, in May, both you and our fund had predicted a V-shaped recovery, and I'm glad to inform our listeners this turned out to be true. And we will talk about it as well as we go along in our show. Let me first introduce Mark once again for our listeners who are new on our show. Mark is the guru of Emerging Markets Asset Group and is currently the managing partner of Mobius Capital Partners. Mark was the chairman of Templeton Emerging Markets and was managing $40 billion, which he created single-handedly when he started with Templeton. Mark has written several books and has been on boards of IMS and several other think tanks. Interestingly, Mark has just released the book, which we are also going to talk on our show today. It's called The Inflation Myth and the Wonderful World of Deflation. Interesting, Welcome back, Mark. And to begin with your latest book, could you brief our listeners about it and how does it apply to India's inflation control and fiscal measures and fiscal planning? It seems to be a paradox.
Yes, that's right. By the way, here's the picture of the book that we have just came out. And yes, I mean, the whole premise of the book is, first of all, the measures of inflation are very faulty because the basket that's used to measure inflation from one point to the other constantly changing. So it does not really give a good reflection of what is happening in the economy. And one of the reasons why I wrote the book was because I see that central banks around the world depend on inflation numbers. In fact, they even target inflation of 2% in order to bolster economic growth. But it's very faulty because the inflation measures themselves are not accurate and are quite faulty. That's number one. Number two, the reality is that, yes, inflation in terms of money going into goods and services is going up. In other words, the amount of money you need to buy something goes up. But at the same time, wages and incomes go up. And at the end of the book, I point that out. Even in India, I have numbers which show that wages and salaries, incomes have gone up greater than the increase in the so-called inflation rates that's being measured. So the whole premise of the book is that because of this, we are actually in a deflation. In other words, because of the advances in technology, we are seeing things getting cheaper and cheaper. So we're in an amazing period of mankind's history where technology is making our lives much easier, much simpler, and much cheaper in terms of our income. So I think this is a very important lesson for all of us, that we must begin to love deflation. A lot of people ask me, why is deflation good? Well, the beautiful thing about deflation is that for the lower of the society, they benefit the most because goods and services for them go down as it does for the rich people, but it impacts the poor people the most. So inflation hurts the poor people, deflation helps them.
Excellent. Mark, what message would you have from your book to our Indian economy, the planners and the people who do all the fiscal planning? They always look at inflation as a good thing in India and a way to manage money supply, our forex exchange ratios and what have you. How would you kind of convince them to look inflation in a different lens?
Well, first of all, I would tell them don't pay attention to the inflation numbers. Don't use them for policy guidance. What they should be using for policy guidance, the degree to which the society is becoming more productive. So in other words, the government efforts should be directed towards increasing productivity in society. Now, how does the government do that? Well, one of the things the government does is spending on infrastructure, roads, bridges, mass transit systems, et cetera, making people easier to get to work, communicate with each other, etc. This increases productivity generally for the society. And I think one of the important developments that we've seen recently is so-called modern monetary theory, MMT, modern monetary theory. And under this theory, I think it's very interesting to note that you are not supposed to be paying attention to government deficits. In other words, the government is the issuer of currency and therefore will never have a problem of paying its debt. The problem and the challenge for the government is how to allocate this debt. It can run up a big debt, but it must allocate it to resources which will become more productive. In other words, will help the society to become more productive.
Well put, Mark. Mark, let's roll back to 2020 and all the fears of the pandemic are behind us. So do you think that we are in the pandemic fading stage and the economic recovery is fully in place? And what are your views about this phase of our recovery? And moving forward in 2021, what sectors or what percentage of the GDP in emerging markets would be constrained because of the pandemic?
Well, as you know, the stock market is a precursor, is a predictor of what's going to happen to the economy. And you've seen this incredible surge in the stock markets, particularly in India. You've seen an incredible performance since the beginning of the year. Now, what is that telling us? That's telling us that next year, India will have a very, very good economy. So although some people are saying, well, India is shrinking this year by 10%, but next year it will be growing by 3, 4, 5, 6%. But the numbers will look like 15% because you're having a -10 and a +5, let's say. That's 15%. So the numbers will look very, very good. And that will give a lot of encouragement to people in India. And this will happen all over the world. Now, in addition to that, what's happening is that the pandemic is winding down because of not only better treatment, but because of the vaccines that are now going to be available, actually available now, and will be widely available by the beginning of next year. So that also will solve the problem of the pandemic and will get people back to work. Of course, India already is emerging out of this even without mass vaccination. And we've seen China now is pretty much out of the crisis and is doing very, very well in their economy. So I believe next year will be a very, very good year. And hopefully the stock market will reflect that as well and continue to do well.
Excellent, Mark. Um, Mark, one very peculiar trend that we saw in this year was the world's cumulative market cap was even higher than the GDP of all the countries of the world. How would you react to this? And do you think is it because the shrinking of the GDP because of pandemic, or we have overbought the markets and we would see a sharp correction in the next year?
Well, there's no question that the economies have shrunk, so the GDPs have gone down. The stock market, in the meantime, continues to go up on the expectation of next year's economic recovery. Now, it is true that people say, gee, if you look on a, let's say, a price earnings basis, it looks like stocks are expensive. But if you look at it in terms of interest rates, they're not expensive. So if you have a interest rate of, let's say, 2%, the reciprocal of that is an incredibly high 50%, 50 PE terms.
Correct.
So what you've got to do is look at it in terms of where the interest rates lie. And of course, those interest rates continue to go down. And I believe
Right.
in India, they will probably also continue to decline.
Correct. So, Mark, just on emerging markets, the equity risk premium is at the lowest for the emerging markets, including India and China at this point in time. However, when you look at on the PE terms, and now that you have explained that both India, China, and the emerging markets look cheaper in respect to the interest, do you think 2021 will be a buyout situation? It will be further, people will further invest into equities, or it's going to be a correction before the markets take a leap forward?
I think people will continue to invest in the stock market. First of all, because with interest rates so low, they need a home for their money, which will give them some returns, whether it be in dividends or in capital appreciation. That's number one. Number two, you're going to see people being much more optimistic with the recovery in the economies. More and more people will be at work, and they'll be earning, and they will have savings in order to invest. So I think a combination of these things will mean that the market will still be pretty good in the coming year.
Excellent. So you have briefly given your headline statement that outlook for 2021 is going to be good. Let's deep dive, Mark, like what you had given us, your predictions for the COVID recovery. Where do you think, what are the nuggets of areas to invest? How are we going to look at those opportunities? And what's your thesis for 2021 outlook?
Well, if you look at the what's happening in the economies, one of the reasons, as I pointed out, for the incredible productivity increase we're seeing is connected with technology. The technological revolution engendered by the internet and by Wi-Fi and all kinds of communication enhancements that we're now experiencing is having a big impact on companies around the globe. And they have been enhancing their earnings as a result. So you have artificial intelligence impacting these companies in many different ways. So I would say that what we want to emphasize in our investments are companies that benefit and profit from this surge of technology. Now that could be companies that are directly related to the internet, such as internet companies, the likes of Google and so forth and so on. And also companies that supply the equipment that makes this communications revolution possible. Companies that produce semiconductors, companies that design semiconductors, and so forth and so on, and all of the server equipment that goes into the cloud operations of companies around the world. So directly, these companies will benefit and will continue. They've already been benefiting and they will continue to benefit. But then more importantly than that, companies in every industry, regardless of what sector it is, capable of utilizing technology will really benefit and will be good opportunities for purchase.
Mark, in our last discussion, we talked about, the sectors and companies that would drive the recovery. And you had mentioned about, companies that would digitize faster and go the digital way during the pandemic will emerge out faster. Do you think that has happened? Because in India, we do see a huge manpower shortage on digitization, and companies are struggling to digitize faster than they would have anticipated. What's your view in the other parts of the world? Are they digitizing as fast as India or China or other emerging markets?
Well, it's the same in other parts of the world. I think perhaps China is ahead of the game in the sense that the government in China has facilitated the rise of these technological giants that you see in China. But the shortage of good computer technicians, software writers, et cetera, is felt around the world. But you must remember there's a whole new generation of people, young people, who are very, very familiar with the internet and are able to surmount these challenges. So it will take time, but we're finding more and more young people getting to this area and succeeding. In our own business, we find some of the young people are very proficient in the internet and in the use of technology. And those companies that are able to adopt technology in this way to enhance their business operations will definitely benefit.
Excellent, Mark. I want to now kind of come to 2021 and talk about a little bit of geopolitics, which could be a party pooper for us in 2021. We have a lot many changes happening. We have a new Biden era, which is going to come. India-China escalation that has not yet de-escalated. We do not know how this would pan out. International trade and tariffs, what has been left behind through the Trump era, we don't know whether there would be a rollback or not. And then the whole issue of globalization versus localization. The 4 years of Trump era has gone from a drastic globalization to a localization era. And then the whole issues about, just recently, Chinese company being banned on US bourses, which obviously is not a very strong signal to international investment flows and listing of cross-border listing of companies for public markets. And obviously, lastly, would be the vaccine diplomacy. India is trying to kind of woo other nations to use the Indian-produced vaccine. China is trying to do that, and I'm sure other countries are also going to go into the race. So can we spend some time talking about this whole geopolitics in 2021? And any of these points could be a big risk for our markets globally.
Well, first of all, you must remember the Trump policies were not designed to reduce trade. The policies were designed to engender fair trade, because the Americans felt that Trump and even now the Biden administration realizes that unfair trade is not good for the US. And of course, the World Trade Organization rules made it possible for countries like China to benefit erroneously from this trade openness that took place under WTO. So that's, I think, the idea that trade is going to be inhibited in any way is false. Trade is actually increased and will continue to increase around the world, whether it be between China and the US, China and India, India and Pakistan, or India and any other country around the world. This trade will continue, I believe. Now, the problem that we face on the trade front is how to make multilateral agreements based on the bilateral agreements that are now in place. And that's the big challenge. At the end of the day, going forward, at least for the short term, trade will very much be based on bilateral agreements between countries, and then maybe we can get back to a WTO type of framework. The important, interesting issue now is has trade actually been reducing? And if you look at the Chinese model, you'll find that the Chinese are exporting more than they were before last year. So this year, it's been an incredible year for China, despite the Trump restrictions. So I believe going forward, trade will continue to grow globally simply because we are now in a globalized world, whether we like it or not. The internet, communications, transportation has become a globalized world, and this will continue. Of course, it's been, because of COVID, it's been inhibited to some degree, but still communications are growing.
Mark, one quick question that I have is, if China, escalates on the border, that would have a very negative impact on the markets per se, and which would mean that the Quad or the other alignments around the world may also support India, and there could be other realignments. Russia is now going with China. Do you think that's a very potent risk for us in 2021 that could affect our markets and the market sentiment?
I don't think so. I think, of course, China has its own ambitions, particularly in the South China Sea and other areas, but I don't believe that the Chinese are going to want to engender a hot war, let's put it that way. They are interested in more peaceful measures to grow their influence through trade, through investment, and that sort of thing. And I think the same thing is true of India. I think the Indians want a peaceful world, because that's the kind of world which will help the country grow and will enhance the wealth of everyone, including India. So I'm pretty optimistic on that front. I don't think the India-China disputes will grow to any great degree.
So there shouldn't be any war, according to you, on the India-China front for the world markets to steadily grow, I guess.
Yes, exactly.
Right. Mark, let's just switch gears a little bit on a couple of sectors that we invest into and we are looking into, and your outlook on them, particularly housing, real estate. What's your point of view for 2021, and is this a sector that will bounce back faster, or is it going to be still a little bit of a drag on the markets?
Well, if you look at the housing situation in India and other parts of the world, actually it's done quite well. The movement of people from the cities to the countryside in India engendered a boom, as you know, in local housing. And this is the same thing you've seen in other parts of the world. People staying more at home, therefore focusing on home improvements, maybe building a new home, maybe buying another home, et cetera, et cetera. So the housing market has been rather good in most parts of the world because of the COVID situation. And I think going into next year, because of the recovery, economic recovery generally, that will result in a continuation of the demand for housing and space generally.
And what about the commercial real estate part of the real estate? We've seen a lot more a reduction in the rentals and the whole leasable space during the COVID time. Is there a bounce back you expect back in 2021? Would more office space get consumed and the inventory be reduced, or you still expect there will be some softness in 2021?
I think there will be a weakening, a continued weakening, because more and more people are realizing that they can operate from home, they can operate remotely, so there'll be less and less demand for office space. Now, it doesn't mean that the office space market is going to crash. It'll still survive, but I don't think you're going to see the kind of growth that we've seen in the past. So there'll be lots of excess capacity at work at this area. And this goes same thing for retail space. Retail space that is able to attract people because of entertainment, because of other things other than shopping, they will do all right. But other than that, more and more people are shopping online, and that means the demand for retail space will not be as buoyant as it was before. It'll still be there, but not as buoyant as before.
So you do expect pickup and recovery in the commercial real estate to be still far away, maybe 23 or further on.
Yeah,
instead
exactly.
of 2020, 2021.
And I think it'll be a different type of space, of commercial and office space. It'll be more relevant to the young generation of people who want to be near their place of residence and also want to have office space, which is a pleasant place to be in with all kinds of facilities, eating facilities, entertainment facilities, and so forth.
So it'll be more the co-working model, business models that had emerged during the pre-COVID era that will kind of go on to be a more mainstream for the commercial real estate in the emerging markets, I believe.
Yes.
Mark, one of the inputs to real estate is your steel, and we've seen metals rally a lot during the COVID pandemic to an extent that it's also affecting our cost of real estate, the new built out real estate. What's your view on metals and gold and in 2021? Do you expect a correction or they are going to rally even further?
Well, I like gold, as you know. I think gold should be considered a currency rather than a commodity. And it's a good idea to have some gold in everyone's portfolio because we know that currencies continue to devalue. So that's one thing. When it comes to the other commodities, it will be related to, particularly to technology, what's happening on the technology front. So some of the metals like palladium, platinum will be in increasing demand going forward because their use in some of the technical equipment that are being used around the world. But you must not overlook the fact that India, China, and other countries around the world, particularly the large population countries, are continuing to grow and are continuing to demand more power. Now, people don't want to use coal, but the reality is that people continue to use coal, but more and more there'll be a switch over to oil, gas, and wind power, sun power, that sort of thing. So the demands for the commodities that go into this kind of power will still be in rather good demand.
Right. Mark, I want to switch gears a little bit in terms of the money flows and the quantitative easing and different incentives that various governments in the emerging markets provided during the pandemic to facilitate the economic recovery. What's your point of view? is this really trickle down to all the different sectors of the economies in the emerging markets, or do you still see the money flows not yet trickle down to ensure that there is a even economic recovery in 2021?
Well, it depends on the country you're looking at, but by and large, the helicopter money, let's put it that way, money that went directly to consumers, was used and was consumed, and is responsible to a great degree for the recovery of some industries and the maintenance of sales, particularly online sales. So definitely, it's been a positive to have that kind of money go into the system. Now, you must remember that a lot of this money was also in the form of loans that have to be paid back eventually. So a lot of the companies that have these loans will be pushing up production next year and will try their best to improve profitability in order to pay back the loans. Some companies, of course, will not survive, but that means the surviving companies will gain market share and should do fairly well.
You mentioned that in our last podcast as well, Mark, and interestingly, we have the Reliance, which during the pandemic actually raised a lot of money as well to move away from the traditional energy business into telecom and new age internet business. Are you seeing such pivots also happening with large giants across the emerging markets?
Yeah, that's happening globally. The integration of communication companies and, let's say, the banking system is ongoing, as you know. Fintech is the key word for many of these companies, and they're now joining the internet revolution with the financial revolution that's taking place. But this is extended to almost every other area of business, whether it be transportation, whether it be food supply, etc. So I think the Reliance orientation is a very, very good one, a very smart one, because rather than just becoming a carrier, you're becoming an integrator, a platform for all kinds of human activity.
What's your view on Huawei? Is this a company that's going to be done and dusted? Are you still going to invest in Huawei, or it's a done deal?
I haven't made any decision yet.
Great. Mark, I have a few questions coming from the audience, and interestingly, many people want to know about your book. So let's a little bit flip back onto your book. I think there is a little bit more interest on your book. So let's spend some time talking about your book here before we go back to our main topic of 2021 and beyond. There's an interesting question, Mark, on inflation, and the question is as follows: India's inflation is pegged to money supply and other fiscal measures. How would India need to look at deflation for economic growth?
Well, India is going to benefit and is already benefiting from deflation, because with the technological revolution that you're experiencing in India, you're moving very, very quickly to lower and lower costs in almost every activity, every human activity on the subcontinent. So the deflationary trend, even though it looks like you're having inflation with the need for using more currency to buy something, the reality is that the costs in real terms, in terms of incomes, are going down. And that's very good for India, particularly for the low income segments of the society.
So that should be probably broadening their consumption basket, I believe.
Exactly.
More, less dollars, but able to buy or consume more goods in their consumption basket.
And you must remember that the quality of the products is changing as we speak. So let's say, let's look 10 years in the past. If we remember the Nokia phone, remember the old Nokia phone?
Very big.
Now think about that and the cost at that time and the cost of buying a smartphone today. And the smartphones now are cheaper than what the Nokia phone was selling for. And the smartphone is doing 10,000 times more items, more ability with all kinds of apps than you ever had with the Nokia. So that's just one example where the qualitative differences that are taking place in products and services is changing the world very rapidly.
Mark, interestingly, I want to ask you a question now, since we have mentioned this. Our forex rate is all pegged to inflation and our ability to export more goods and services abroad. With your concept of deflation, would India not become uncompetitive given that we have kept our exchange rate floating and not a fixed exchange rate economy? Do you think we should probably flip to a fixed exchange rate economy?
Oh no, I think fixed exchange rates are a very dangerous instrument, and you've seen in the history how many disasters it's caused.
Correct.
An example of that in recent history is the Asian financial crisis, which started in Thailand. If you remember, the Thai government tried to hold the Thai baht strictly to, I think it was 30 baht to a dollar, and they ran out of foreign exchange, and of course, everything came to a real mess, and they had to tolerate 50 baht to the dollar, or even more in some cases. So a fixed exchange rate is a very dangerous thing to have for a country. Now, it doesn't mean that the central bank can iron out some of the volatility, but they certainly should not try to hold the exchange rate to a given item. But by the way, in that regard, I think it's very important for India and other countries to consider not foreign loans, but local raising of capital by the government, local bonds on a massive scale to build infrastructure. And as you know, a country that issues bonds in its own currency will never have any problem in paying those bonds back. And that's certainly true with the US.
Correct. Got it. Mark, one very interesting question again on your book. And this is a very personal question. You may choose to answer or not answer. What was your inspiration behind this book, and what motivated to write this book?
Well, I was in Argentina. We were investing in Argentina, and we came across the crisis where inflation was going up at a very rapid rate. And the woman who was in charge of the inflation number calculation was told by the government to make the numbers lower than they actually were. So I began to realize that a lot of these inflation numbers are influenced by political decisions and by many other inaccuracies. So that was sort of the start to look at in more depth at these inflation numbers. And I also realized that too often economic policies, very important policies affecting millions and millions of people, are based on these numbers, many of which are quite false and misleading. So that was one thing. The other thing I found that in traveling around the world, I noticed that lives have been getting much better than when I started 40 years ago looking at emerging markets. And the question was, why is this happening? What's happening? And of course, the answer was technology. And I think we had to reflect on that and show people that things are getting actually better. Life is getting much better than it was in the past. And if we continue to increase productivity as a result of technology, things will even get better than they are now.
I will take one more question before Mark, we get on to our topic of 2021. Um, Very interesting question, Mark. What is an alternative measure of inflation that governments should probably start measuring?
I think what they should be measuring is happiness. In other words, uh, they should be measuring the degree to which people are content and happy with their lives and feel that they are doing better than previously. That is really the measure that is most important. Now, I agree that it's to some extent it's a qualitative measure, but it can be done. So you really should have a happiness index rather than an inflation index.
In fact, in Dubai, you have a minister of happiness as well, or
Exactly.
something like that,
Yes, exactly.
under Sheikh Maktoum, I'm told.
Yes, exactly.
Interesting. So, Mark, this is a great pivot from looking at basket of what we buy and consume on a month-to-month basis, and projecting the price increases to contentment of and contentment in terms of what money can do and buy for you.
Exactly. Yes, yes.
Excellent. Mark, let's go back on 2021 scenario that we are planning and we are talking today. Uh, so like always, Mark, when we ask you which countries and which sectors will you bet on in 2021, what's your top pick? I
Well, if
know
you look
you will never talk about the companies, so I'm not going to ask you about the companies.
well, if you look at our portfolios, you'll see that technology is right at the top.
Correct.
Technology is up there. Medical related kinds of companies, particularly those involved in testing and that sort of thing. Uh, and then also anything related to consumer products. Uh, and then finally, companies involved in the infrastructure and those supplying the kinds of products that are used in infrastructure, home building, road building, etc. So those are the four areas that we're particularly interested in.
And how would you rank the different countries in your portfolio on your emerging markets? Where is China, India in the ranking, in the pecking order?
Well, India is at the top right now.
Oh,
India is
really?
country, uh, followed by Korea, then China, Taiwan, and then further down the line, we have some money in Vietnam, some money in South Africa, in Turkey, Brazil. Those are the main ones.
Interesting. So, Mark, you're going to be staying bullish on India as well.
Yes, yeah, we're quite bullish on India.
Excellent. Mark, I need to invite you for your book launch in India, and I'm sure many of our listeners who have been asking these interesting questions would also be very keen to get an autograph book from you and read about it as well. It is very interesting talking to you, but before I let you go, Mark, I know you had to go on to another session as well, I was told, and I would love to make a few announcements. Our heat map for 2021 for healthcare life sciences will be released sometime next week. I'm sure I would also love to share that with Mark for his comments as well. I want to make two more announcements before I close. We have been listening to our listeners, and next year we are going to run this quote unquote with KK on two tracks: healthy and wealthy. Healthy because of what we have gone through in this year, and wealthy because without health you cannot become wealthy. So these are two very intermingled issues, but we have lined up a star of speakers from different areas in health, healthcare, and investments. And we would be, with popular demand, we are going to run this on a fortnightly basis. Our team is very excited to give more speakers come and talk on our show. We will be releasing our lineup for the next year very shortly on our website. And Mark, you have been an inspiration to us. You came in at a time when many of our listeners on the show were very uncertain as to what was the future. What is the future of India? What is the future of their careers? What is the future of their companies? And where is the world going to go ahead with? Your talk was fairly inspirational to the 750 CEOs and people who attended. And I need to thank you from my heart that your talk and the subsequent speakers' talk have directionally motivated some of our listeners who have egged me on to continue this show. And I really want to thank you for taking that time on that show and again coming back on our season finale today. I wish you all the best, safe travels, good health, and I definitely want to look forward to having you in India on your book launch. I'm sure many of our listeners here are equally keen to interact with you.
Thank you very much. It was a pleasure, and all the best for the new year.
And happy 2021, and I'm sure more money is going to come from your fund to India.
I hope so. Thank you very much.
Thanks, Mark, and stay safe. Safe travels.
Okay, bye-bye.